What happens to a city when billions of dollars vanish overnight? West Vancouver just found out. Multi-million-dollar homes are being slashed by six figures. Sales have collapsed nearly 50%. And the foreign buyers who once treated this place like their personal ATM? They're gone. This isn't a slowdown. This is a luxury housing market in full collapse, and it's happening faster than anyone ever imagined. For decades, West Vancouver felt invincible. It was Canada's crown jewel of wealth, a mountaintop of ocean view mansions that seemed immune to economic gravity. Homes sold in days. Prices rose endlessly. And sellers believed the demand would never dry up. But today, the reality is staggering. The foundation of this market has crumbled. Homes that used to attract bidding wars now sit untouched for months. Sellers are watching their equity evaporate. Buyers have disappeared. And the market that once ran on global capital has suddenly run out of fuel. The numbers tell a brutal story. Last May, West Vancouver saw 53 home sales. This May, it was also 53. But beneath that surface, the truth is far worse. The sales-to-active listings ratio, the metric that reveals the real state of the market, shows a collapse nearing 50%. In the luxury segment, the damage is even more dramatic. Detached homes over $5 million are down nearly 40%. Luxury condos over $4 million are down almost the same. The market isn't cooling. It's freezing. To understand why, we have to go back. Because West Vancouver's boom wasn't built on local incomes or local demand. It was built on foreign capital. For years, wealthy overseas buyers, especially from China, poured billions into the region. Homes weren't being purchased as places to live. They were being purchased as financial vaults, safe havens, and symbols of global status. At the peak, as many as 70% of detached homes over $3 million were sold to Chinese buyers. Entire neighborhoods shifted almost overnight. Realtors specialized in international clients. Developers designed projects specifically for foreign money. Prices detached completely from the local economy. And everything worked, as long as the money kept flowing. But then, everything changed. China's once unstoppable real estate empire started to collapse. Evergrande fell. Country Garden fell. Developers defaulted. Millions lost savings. Trillions disappeared. Beijing responded by tightening capital controls, making it harder than ever to move money out of the country. The pipeline that fed West Vancouver slowed, then stopped. And while that was happening, Canada made its own moves. Foreign buyer taxes. Speculation taxes. Vacancy taxes. And finally, a nationwide foreign buyer ban in 2023 extended to 2027. Overnight, West Vancouver's primary engine of demand was gone. And the results have been devastating. Inventory has surged. Luxury listings over $2 million are up over 20%. Apartments over $2 million? Up the same. The median home sits on the market for more than a month, but thousands sit for far longer, 100, 200, even 300 days. Sales ratios have collapsed into single digits. And when a market falls below 12%, prices don't just soften, they fall. Hard. Behind every price cut is a person losing real money. A family who bought a $3.8 million home in 2022 now watches comparable properties struggle to sell at 3.2. Realistically, they might need to drop to $3 million or less. That's an $800,000 loss, before fees, interest, or taxes. Another investor bought two luxury homes totaling $8.1 million. Combined, they've dropped by more than $1 million in value. Add carrying costs, and their total losses approach nearly $2 million. Multiply that story across the entire region, and what you get isn't just a housing downturn, it's a financial shockwave. Realtors are closing offices. Developers can't sell pre-sales. International students are disappearing. Private schools are losing foreign families. Luxury retailers are feeling the strain. Even contractors and tradespeople are seeing projects vanish. Entire microeconomies, built on the assumption that foreign wealth would always be there, are now collapsing under their own weight. And the psychology of the market has flipped. When prices rise, buyers rush in. But when prices fall, buyers wait. And waiting creates a deadly feedback loop. Prices fall. Sellers panic. More homes hit the market. Inventory climbs. Buyers hold back. Homes sit even longer. Sellers slash prices. And the cycle repeats. This spiral gets even worse when mortgage renewals enter the picture. Many owners locked in interest rates around 1.5% to 2% during the pandemic. They're now renewing at 5 or 6. Monthly payments are doubling. Some owners simply cannot afford to hold on. And forced sales only push prices even lower. Meanwhile, appraisals are coming in below offer prices. Deals fall apart. Homes go stale. And sellers grow desperate. The entire market is stuck in a slow-motion unraveling. So what happens next? West Vancouver now faces a long, painful adjustment, because prices must fall far enough for local buyers to participate again. But with median household incomes hovering around $69,000 and average home prices above $2.5 million, the math simply doesn't work. Some analysts believe prices must fall 30, 40, even 50% to return to any kind of local affordability. Could foreign buyers come back one day? Maybe. But between Canadian politics and China's capital controls, that possibility feels distant, if not impossible. Could lower interest rates save the market? Not with renewals hitting like a financial earthquake. And so, West Vancouver enters an uncertain future. A beautiful place with astonishing views, breathtaking architecture, and a luxury housing market that has lost the foundation it was built on. Homes that sold for $5 million just a few years ago now struggle to attract offers at $4 million. International buyers are gone. Local buyers can't afford what's available. And thousands of owners are trapped between financial reality and the emotional pain of accepting massive losses. This isn't just a statistic. It's a cautionary tale. A reminder of how fast wealth can disappear. How fragile a market becomes when it depends on global capital. And how devastating the fallout can be when that capital suddenly dries up. The question now isn't, will the market recover? The question is, can the people who bought during the boom survive long enough to see it?